Inadequate debt instrument is yet another problem faced by capital market. Understand, debt market is a market where there is a selling and purchasing of debts, that is debentures and bonds happens. Before going further that how capital market suffers from inadequate debt instrument, let us first understand what do you mean by debt instruments and equity instruments. Well, equity shares means company floats part ownership. So those who are owner of equity shares do what? They purchase the equity at a price and they become a part owner of the company, and company gives them dividend from their profit. Not only that, they can sell that equity at a premium in the stock market. While in case of debentures, debentures are basically creditors of the company and they earn fixed rate of return. So they cannot sell or purchase debentures as you do it for as easily you do it for stock market. It doesn't happen that easily for debentures or debt funds like bonds and debentures. So naturally, the investor base for debt instruments is less. The another reason that there are inadequate debt instruments is the high cost of issuance of debt instruments, which means if you really want to buy some debt instruments, understand you have to follow a lot of legal procedures, legal documentations. So that adds to the cost of issuance or cost of purchasing of these debt instruments. So that also deters investor from going into debt instruments. Another reason where debt instruments are not preferred by investor because it does not have access to small and medium enterprises. Debt instruments are only facilities provided for large scale enterprises. Hence, in nutshell summary, there are inadequate debt instruments for capital market. The very reason that debt instruments have low investor base, because in case of equity market, they are part owner and they can sell at premium, but in case of debt instrument, you get fixed rate of interest. Debt instruments like bonds or debentures are less preferred because of that. Well, the cost of issuance of these debt instrument is also high, which also make it less likely choice for investors. Apart from that, debt instruments are not accessible for small and medium enterprises. These are easily accessible for large scale enterprises. So investment options reduces. Hence, there is inadequate debt instruments in capital market.